Ladies and gentlemen, welcome back to the channel. Here in this video, we are going to be going over everything you need to know on AMC stock and our broader markets. You are seeing the chip sector starting to give some of it back. Now, if that continues, that could be a leading indicator of what could be to come in our markets, but we will discuss more of that in the next video. Now, we'll go over exactly what's going on and what you need to know for the day today. We did have some economic data that just came out this morning that came in mostly in line with expectations. Some good things to say more than not. So AMC stock is up 1.23% following all of this information. I think we need to get into it. Hit that like button as well as subscribe to the channel. Thank you for watching, and let's get started. So first up, we're going to look at the Ortex data. I think that's starting to get pretty juicy as well, but let's take a look at the economic data that came out today. And it always does that. It always skips to the next week. So for today, Friday, January 26th, we got core PC price index month over month came in line with expectations. You were expecting 0.2% month over month. That is the number indeed we did get. That is still a rise from last month's number of 0.1%, but still, coming in line with expectations is good enough for our markets. Personal income month over month is expected at 0.3%, and that's what it came in at, 0.3%. Now, personal spending, this was the main highlight of the morning. Expected at 0.4%, you actually came in at 0.7%, so that was almost 100% better than expectations. Now, why is that good? Well, in a market where everyone is fearful about when the recession is going to come, if there's going to be a recession or not, the big thing to watch is obviously GDP. Now, what comprises GDP? 70 to 73% of which is consumer activity, consumers spending money. If consumers spent more money than expected in December, that's going to be good for GDP. Now, GDP estimates have not risen. The freaking dog just collapse my chair, but that's all right. GDP estimates have not moved, but they are likely to go higher following this better than expected spending number that did come out today. So I think that is overall good news for our markets, but not enough in which to get people even more excited, but nonetheless, that was a positive more than a negative, even though some people might say, well, if people are spending more money, does that mean inflation is going to go higher? And not exactly. Actually, in fact, not true at all. Spending really does not have much to do with inflation, at least normalized spending. If you give people trillions of dollars, of course, that can cause inflation if people all go out all of a sudden and start to buy things, right? Supply and demand. People are not getting trillions of dollars. People are not getting stimulus checks anymore. Just good spending is good spending. What you're hearing more or less from other companies that are reporting earnings is they're having problems passing on costs to consumers. Now, one thing that I specifically want to be watching for is whether or not some of your shipping costs, this is the shipping containerized freight index, you can see it's up like 300 plus 400% in a very short amount of time, since really the mid-December, October, November levels. Does that eat into margins from companies, or does this cost get passed on to consumers? So far, it doesn't look like there's any direct correlation, but the guy that is supposed to be like in charge of maritime trade, he said this Red Sea situation is even worse than the Rona. We'll see if there's hundreds of ships sitting outside of Los Angeles and San Diego again. If you guys lived through that moment in time, that was all over the news at that point in time. You could look out and see a bunch of ships everywhere. I doubt it's going to be like that. I would be hard pressed to draw those kind of conclusion. So that is the big thing that is actually happening today. We did as well get pending home sales data. So pending home sales, this came in at a big beat, 8.3% month over month for December. Year over year came in at positive 1.3%. The estimate was negative 3.4%. This is the first time year over year home sales have been positive at all. January of 2023, so 1 year ago, you were negative 24.1% year over year. And it did continuously kind of start to get better, but that's because the comps were getting easier, right? If you're negative 24.1% year over year, it doesn't take that much of a beat to be positive year over year. You just have to be better than negative 24.1%. So home sales are still way down, even though it's positive year over year. Again, remember the starting point, negative 24.1%, but that is indeed a step in the right direction. Month over month, I think, is a little bit more telling. If we actually look at this one, month over month, you're up 8.3%. That doesn't have the same kind of year over year comparison. It's not as easy to, draw a conclusion and say, yeah, that was good, because, last month was only negative 0.3. So positive 8.3 is a big change month over month. I think that is fantastic news for markets, because let's think about this logically. For anyone that's in the recession camp, for anyone that is, thinking there could be a recession coming, it's actually pretty dang simple, right? If you start to, go into a recession, that's not good for stocks. So anything that avoids that is going to be good for stocks. Good spending data, good GDP, good retail sales, durable goods orders, inflation data, all of that's going to be great news. Now, I think one thing that is really getting overlooked as of right now is housing. Now, housing is typically most people's number one asset. That's where most people have a majority of their net worth. The average person stays in a home 7 years and then they get a new home. So there was a lot of home sales around the Rona time. And that was 4 years ago now. So I think a lot of people are starting to get to that point where they want to buy a new home, but rates are so high that it's unaffordable. Their monthly payment. That's what people care about, is their monthly payment. I was a real estate agent. That's all people care about. People really don't care about the amount as long as the monthly payment is something they can afford. Now, with that being said, if you bought a house in 2020 or before, you are up massively on your equity. Right? As long as real estate doesn't collapse, basically no matter where you own a house, you are up, 20 to 100+% on just your equity value, which you're talking hundreds of thousands of dollars per home, right? I think the average home has like $150,000+ in just equity, like 30+%. So if people can start to sell their homes, buy a new home for a reasonable monthly payment, something that they feel they can afford, they're going to get hundreds of thousands of dollars in the bank. Now, only about 60% of Americans are homeowners, so this is not something that applies for everyone. But a lot of people, let's say 5% of people or 2% of people, if they were to, sell their home and get that much money in the bank, that could be very stimulative to the broader economy, something that we have not had for a long time now. For 2 years now, we haven't had people feel like they can buy a new home. Just look at the real estate data. So I do think that is a bright spot that a lot of people are just not considering in regards to actually avoiding a recession. Because let's be honest, you want to avoid a recession at all costs. If you are AMC, that's gonna put you in a really bad position if we do go into recession and you do get a larger market crash when AMC stock is $4.11 per share. Now, if we take a look here at the Ortex data, you do have 10.47% short interest of free float, $107.04 million worth of short positions currently, 1.39 days to cover, 26.23 million shares currently sold short, shares out on loan 23.53 million, cost to borrow 1.07%, utilization of 35.56%, and a short score of 58.29 out of 100. So numbers looking pretty good there. It looks like the short interest estimate continues to rise. I'm not going to argue with that whatsoever, because that's what these are the numbers people look at. What a lot of other retail traders are going to look at when they're thinking about a potential short squeeze, when the time does arise, when AMC stock starts to actually, do well, right? When AMC gets a 10% day, people are going to look at the short interest numbers and say, hey, AMC's 10%, 15, 20, 30% sold short. And that's what a lot of them are going to make their decision based on, if AMC stock will go through a short squeeze or not. So I do think that is very much positive that you are seeing that starting to show. If you've been a viewer of this channel for a while, you know that I think AMC short interest is 200+%, but that's only just my opinion, and I cannot quantify that. So come to your own opinions on where AMC short interest actually is. Now, we do have volume activity in the options market today. 53.36% of the activity is to the call side. 46.64% of the activity is to the put side. So there you have that. We did get a new AI investor sentiment survey as of yesterday. If you did not see this, here you go. 39.3% of investors are bullish, 34.6% of investors are neutral, and 26.1% of investors are bearish. So bears falling a little bit, bulls falling a little bit, neutral is rising. Neutral investors right now are at the highest they've been in a long time. The 1-year high is 39.9%. That was February 22nd of 2023. So I believe this is the second highest period of time we've been in the last 12 months. Historical averages are around 31.5% neutral. So right now you're higher than historical averages for the amount of neutral investors out there, which I think is pretty interesting overall. Now, if AMC stock stays where it is to close out the trading day, you're going to have about 10,000 calls that do close in the money, and about 82,000 calls close out of the money. In the money puts at about 20,000, out the money puts at about 20,000 as well. So decent amount of option activity here. It could make for a volatile kind of end of the trading day, but yeah, nothing to really write home about. Now, AMC's market cap continues to fall. AMC's market cap currently at $809.3 million. So it's not like AMC's a multi-billion-dollar company anymore. It's not that richly overvalued. It's more so in line with its actual fundamental valuation, which I think makes it pretty interesting, because odds are that AMC could potentially get a buyout here. AMC could potentially go much higher than $4 per share. If that's where its fundamental value is, then yeah, I mean, just imagine when people get optimistic about AMC. You're also trading near the 52-week low at $4.01 per share. Sentiment is extremely bullish at 89. 1 day ago, so yesterday, it was at 40. People feeling a lot more bullish today, and that's because AMC stock is up about 1%. Message volume is the same as it was yesterday at normal at 51, so nothing too crazy there. The participation ratio has been increasing from a low of like 10 recently, now to 47, so I do think that is better than not. As far as the 10 and 2-year yield curve inversion, you're continuing to uninvert. You're now only inverted 14 basis points. One good day for 2-year treasuries, one bad day for 10-year treasuries. You're going to see the yield curve go positive. Once you go positive, that's when people are really on a recession watch. So go ahead and keep that in mind. 10-year treasury yields here on the day today up about 3 basis points, which I find interesting considering the data today came in better than expected, and good news really across the board. Now, if you look at what markets are pricing for Fed policy, keep in mind, we'll talk about this in the next video, but we do have a Fed meeting coming next week on January 31st. What the Fed is going to do next week is potentially outline a path ahead for quantitative easing. We did see, as I reported in the last video, the Fed announced the end to the bank term funding program, which is being utilized at an all-time high, $161 billion worth of bank money that is being held in there as essentially how it works, let's say you bought a bond 2 years ago at $150. Now it's at $90. You could say, hey, I need this cash. I have redemptions. I have to fund my operations. I don't want to sell this bond at a 40% loss. I'll go ahead and give you the bond, Fed, Jerome Powell, and you'll just give me the face value of what I bought the bond for, as if it's maturing and I'm getting my money back, right? So the Fed's not making money. They're not losing money with this program, but it is being very utilized ever since it became a thing. It's been heavily utilized, but even more so recently. You see here, it's been spiking quite a bit. And if you are, and if you can't see that too well, there you have it. It's at, you know, the highest level it's been at. And the Fed just announced they're ending that coming on March 11th, which is right before we do have the next meeting on March 20th. Odds are the Fed is going to give us extensive details on what they plan to do with that program and what they plan to do as far as quantitative easing, because right now the Fed's running off $90 billion of bonds every single month. Odds are the Fed is going to come out and say, yeah, we're done doing that. And, that should help drive down yields. So I imagine next week you could actually see the yield curve go positive again, which, oh my gosh, yeah, that's going to either be really good or potentially really bad. Let me know what you think down below in the comment section. Now, for March 20th, obviously these odds are going to change, but currently a 1% chance of 2 rate cuts by March 20th, so that's not going to happen. There is a 46.2% odds of a rate cut by March and 52.9% odds of a pause by March. So currently you're pricing in a pause, no rate cut, but that is still very uncertain. Now for the entirety of 2024, you are pricing in 1, 2, 3, 4, 5, 6 rate cuts with 36.7% odds. 5 rate cuts is the next most likely outcome at 32.8%. So there you have that. I believe that's all that we have to go over in this video. AMC stock currently up about 1.5%, so a pretty solid day. You've seen this though as of recently. AMC stock will open strong and then close by the end of the day really, really weak. So we want to see if that does happen, and you know what, could come with that situation. Nothing's certain as of right now, so we just want to watch to see what happens. AMC stock's pretty close to a new 52-week low, all-time low, and if that were to happen, well, that would not be so good. You did hit the high today of $4.26 per share. You're currently at $4.13 per share, so you've already given quite a bit back. We'll see what happens by the end of the day. Stay tuned to the channel for the next video. We're going to be going over earnings coming next week and what could unfold for AMC stock here in the near term. Hit the like button as well as subscribe to the channel. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.